Let's see if we can find another big opportunity in the market with all that is going on this week. I gave you guys this pullback on the indices, made an entire bag on QQQ puts as well as Apple puts due to the tariff burden and the technicals that I discussed with you, which I will go more into. But I have so many juicy updates for you, so let's get right into it. So like I said, the market's pulled back 3 to 4% after the downgrade, although the effect was a few days delayed. We also got another flip on the tariffs, where Trump said that he was going to impose a 50% tariff on the EU on June 1st. And as of Sunday, yesterday, as of the time of this recording, these were delayed to July 9th. So what implications will this have on the market? And we also have the big, beautiful bill, which is on the Senate floor, getting ready for a vote, likely this week as of the time of this recording. And if that wasn't enough fun for you, we also have Nvidia earnings, the last of the Mag 7, reporting after market close. I'm going to tell you what I think about Nvidia earnings and what is the likely play based on previous earnings. And on Wednesday, May 28th, we have the FOMC meeting minutes from the last FOMC. But more importantly, we have GDP, unemployment claims, and core PCE on Friday, May 30th, which is the Fed's preferred inflation gauge. And then a little bit of soft data with consumer sentiment on Friday as well. So let's talk about the short, which we closed, and I'll talk about whether there is an opportunity to short some more, which I think there might be. And then I'll get into a summary of the super important news that you need to keep your eyes on. And then I'll go over an Nvidia and a Tesla play towards the end of the video. So I dove into the technicals in detail in the last couple of videos. But in summary, we had the divergence between ES and NQ, S&P on the right, NASDAQ on the left. NASDAQ made a higher high, S&P made a lower high, but more importantly, look where we were at. This is the 2025 open for S&P futures, the opening price on the first day of the year. We rejected exactly from there. Not a lot of people were looking at this. And on NQ, we took liquidity above it and then rejected as well. Now, I want you guys to look at the 4-hour chart. The 4-hour chart, we finally broke market structure for the first time since the April 9th initial pause. This is the first time we have bearish market structure on the higher time frame, making lower highs and lower lows. You could see the same on the S&P 500. Now, like I said, on Sunday, Trump did give us that delay, that 50% delay to July 9th. Now, I don't know which one is better news, the fact that there's a delay to July 9th, or the fact that it's a 50% tariff, which is a lot more than what was initially expected. So I don't know really if the delay outweighs the fact that a 50% tariff is what's being considered now. And if this bill passes this week, then I think that the market is going to go back to all-time highs. But before those two things happen, and again, now we're dealing in the fringes. So the optimal short was already had. Now, I do think that there is likely a continuation, and there's a couple of reasons for that. If I pull the 21 EMA, you could see that we haven't touched it. However, if you look back at most of the retracements, we tend to touch the 21 EMA and a lot of times go under it. But we haven't done that yet, and we still have this gap that's left to be unfilled. So if you look at the hourly chart, in my view, this looks like a market maker sell model, basically an upside down curve or an upside down U, where you have a buy model and then lower highs and lower lows to complete the sell model. Now, I know futures were up because futures were open during a part of Memorial Day, even though the stock market was closed, but I don't really put a lot of stock in this. I would rather wait for the market to open and see what real volume does. But I still think that barring any good news, any more good news, that we will likely fill this gap. Now, I could be entirely wrong, and because I did make a killing on puts already, I'm not trying to give all of that back. So of course I have an invalidation model. Now, what is my invalidation? If SPX closes above the 2025 price on the S&P 500, then I will close those puts and be done with it. The 2025 opening price on SPX, by the way, because I always get asked that, tell me the exact price. Well, you can pull up the chart and do some work, but the exact price is 5903.26. And on the SPY, that exact price is 589.39. Okay, doing the Lord's work for y'all. Now, I will get to Tesla and Nvidia at the end of the video. By the way, I told you guys in the last video too, I expect gold and Bitcoin to rally, and that is exactly what happened. So if you bought gold and you shorted the Qs, you made a lot of money. just off the video. Congrats. And if you're watching this video and you catch it in time, it's a good time to mention that we are doing a one-day Memorial Day sale, 50% off the annual membership. This is only for one day and will expire after this video is posted. The midnight after this video is posted. Back to the video. Now, what's really scary is what's going on with bond yields. The 30-year is back above 5%. And this is likely why Trump put a delay on the EU tariffs to July 9th because of the 30-year as well as the 20-year and the 10-year going up like crazy. Even more scary than that is what is going on with global bond yields, specifically with Japan. Japanese bond yields are reaching 2008 levels, right? Reaching Lehman Brothers levels. You could see this is the worst liquidity on record since 2008. And you could see the basis points on their bonds are the highest ever since 2008, even higher than 2008. This is because Japan's inflation is actually higher than it was in decades. So once again, the administration has not figured its way out of this bond problem. If we look at the 10-year, 10-year still trading above 4.5. And we know that the Fed is not going to come and help because they don't know what the effects of not only the tariffs are, but now they don't know the inflationary effects of this big, beautiful bill. We know this big, beautiful bill will likely add $4 trillion to the US debt over the next decade. All it is tax cuts and increased spending. And we're implementing tax cuts and increased spending before we address the yields, which, like I told you guys on this channel before, was not the initial intention of the administration. They wanted to bring yields down and then pass the bill. So because of that, if you take a look at the Fed funds futures, we are now not anticipating a cut, not even remotely, until September. And even then, it is basically a 50-50 proposition whether the Fed cuts or not. And now we are anticipating the first cut in October. And in December, we are anticipating maybe another cut. So right now, the Fed funds futures market is telling us that we just might be getting 1 to 2 cuts this year because the Fed cannot act at all if all of these inflationary things are going on. Now, although I'm anticipating just a little bit more of a drop to fill the gap, but this is just on the fringes, in general, what I'm anticipating for the midterm is after the bill is passed, and I personally don't think that any of these high tariffs are going to go into play, not even with China. In my opinion, there's going to be a lot of flip-flopping. I do think that we can see a rally. I mean, we're not even that far off right now. Between now and all-time highs, just 6%. So I do think that we can see a rally back to all-time high, very similar to what happened when we passed the first Trump tax cuts in December of 2017. In December of 2017, you can see this insane pump here that was basically a 6 to 7% pump before then suffering a correction. So I do think there will be some enthusiasm behind all of this money printing that the bill is going to generate. And as I said before, you could certainly ride that wave by buying certain stocks that will take advantage of the S&P 500 in this gap here, like Meta, like Google, and you could take advantage of this move if you want. But if we're talking about valuations, the S&P 500 is basically in the 95th to 100th percentile. If we're talking about 20-year distributions, trading at 21 PE, and the NASDAQ is around in the same range, that 90, 95th percentile range at 26 PE. Even the equal weight S&P 500 is now above that blue box, which represents the 75th to 25th percentile range. So it is getting on the expensive side. So again, like I said, I will not begrudge anybody for saying, thank you, I bought the dip. Like you said, I made a lot of money. I'm going to exit here, sit on cash, buy gold, buy Bitcoin, put it in a high yield savings, buy treasuries, whatever. Now, let's talk about Nvidia earnings because I have some great data for you. This is off Market Chameleon. You'll find a discount link in the description if you want to use them. But if we take a look at the last 12 earnings, you can see here the options market overestimated Nvidia stock earnings 67% of the time. So for those of you that don't know, but still try and trade options, we have something called the expected move. Now, the expected move happens every week based on the way that options traders are placing their trades, but it becomes even more significant on binary events like earnings. So you can see here that Nvidia's expected move for earnings is around 8%. Now, what happens when a stock doesn't beat the expected move? It means all of your options are fucked. So even if you bought calls and say Nvidia goes up $3, your option is still going to lose money. I'm sure some of you have already experienced a similar situation. A stock needs to beat the expected move up or down in order for you to make money on your options. So if you take a look, the last time that Nvidia handily beat its expected move was February of 2024. The earnings expectation was 9%, and Nvidia rallied 16%. And you can see that it's outside of this measuring stick here, meaning that it beat the expected move. But most times, Nvidia stays within the expected move, and options traders act like degenerates and still buy loads of calls and puts and lose money on them. Now, you could say, well, because there are tariff implications and the news cycle here is a little bit different than normal, I am expecting a big move on Nvidia. If that's the case, then you buy strangle, meaning you buy a call and a put that are out of the money, likely 25 delta on each side. If you are just basing your trades off of this data, then you sell an iron condor because you are expecting a neutral move. So if we go back to Nvidia's chart, 141.5 is where the high side is for the expected move, and about 121 is where the low side is. So this right here is the expected move. If Nvidia doesn't go above this for your calls or doesn't go below this for your puts, you're going to lose all your money. Another trick you could do if you wanted to speculate on Nvidia options and not get IV crushed is by playing SOXL calls or puts. That will suffer a lot less IV crush than Nvidia because Nvidia is reporting earnings. SOXL is an ETF that includes Nvidia as well as other chips, but will not suffer from the same IV deterioration that Nvidia will if it doesn't make your expected move. Now, regardless, SOXL is nearing my buy point. I told you guys that once we fill this gap, I will likely buy SOXL once again. On this one, I will have a stop limit. It is a leveraged ETF, so I will buy SOXL with a stop limit below that $12 mark. Remember, I picked this up for $7 already, but my immediate target will be a little over $21 on this. Now, I still think Tesla is a major long here on this pullback. I would have liked to get a little bit more of a pullback, but you can see here that we are creating a bullish market structure, higher highs, higher lows. Some of you will call this a bull flag in the same way that this was a bull flag. And if you take a look at the volume on Tesla, you can see that there's just a bunch of rabid buying here. And if you take a look at the options flow, we're seeing a lot of unusual activity at the 440 call that expires July 18th. If you look at the volume versus the open interest from last week, we are just getting millions of dollars in this specific option here. Now, I personally don't like to go that far out of the money, and I did say that 370 was my immediate target, but I could see why they would select that expiration because the latest news is that Tesla's on track to launch robotaxi trial in Austin by end of June. And if you take a look at the options chain, you could see that July 18th is the first monthly option expiration after the end of June. So they're not going to buy these options for June 20th if the event is at the end of June. They're going to give themselves some time for the run-up, and July 18th makes the most sense. So if you look at that 440 call on July 18th, you can still see that the volume is insane. 42,000 in volume versus a 2,700 in open interest. Now, I personally am not much of an out of the money options trader, so I will likely opt for the 350 call here on Tesla expiring July 18th. This is trading at $3,000. So you would either have to turn this into a spread by buying the 350 call, and then you can even sell on top of that the 355 call. That is a $5 spread that will cost you $2.45. If Tesla's above 355 on July 18th, then you actually make $2.55 or $255 per contract. So it is a great way to get in cheaply if you don't want to spend $3,000 for the call, and you should not oversize anyway. Like I said, any options play that you take really at most people's level should not be more than 1 to 2% of your portfolio. Once you get really good, you can bump that up to 5 or 10% of your portfolio, but don't do that now if you're not profitable. Another option is playing TSLL, which is a TSLL, God, I said that weird, which is a 1.5x leveraged ETF. But you can see that the TSLL options, if I go to July 18th, are a lot cheaper than Tesla options because the ETF has a cheaper price. So you can see here the $20 calls are 143. Obviously, you're going to suffer by way of volume and open interest because it's going to be a lot less liquid than Tesla. So the bid ask might not be as tight as Tesla options. Just throwing that out there for you guys. Anyway, traders, Memorial Day sale. If you're watching this and it's still live and you get lucky, make sure you use that coupon code down below. 50% off the annual membership. You will not see that deal again for a while, or 25% off the monthly for 3 months. As always, if I've helped you in any way or these videos help you think about trades and think about investments and think about valuations and decision making, hit that big fat thumbs up. Let me know in the comment section below, what are you doing with regards to your portfolio? Are you out of the market? Are you waiting? Or did you sell? Are you holding? Are you buying more? Would love to know. Leave it in the comment section below. I love that everybody really has a different disposition as it relates to the market. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.